All right, so here's another thing that we learned today. We learned about MACD values, and I want to go into the pros and cons of the MACD. So the values of it. So basically the MACD values, it's set numbers, right? And these numbers represent how fast the MACD moves versus how slow it moves. And I want to get into why that is so crucial in reading the MACD and understanding what its purpose is and seeing the movement of the market. So let's get into it here. MACD values. So you can see our numbers here, 12, 26, and 9. Those are standard. Those are what most MACDs come set as default, right? As you can see, you can change the numbers. A fast moving MACD with lower numbers, you're gonna have way more noise. You're gonna have very, very choppy movement. You know, 5, 13, 5, very, very choppy. You increase your numbers, you're gonna have a very slow movement. You're gonna have a very smooth, you're not gonna be caught by fake signals, you're not gonna be caught off guard. You know, very smooth. Now, let's talk about the pros and cons of that and why you may or may not want to adjust your MACD values. So, the lower the number, the more responsive it is. The line reacts faster to fresh price, earlier signals, and more noise. If you raise the numbers, it calms down. If you have higher numbers, you're gonna have a lot smoother, but you're gonna be delayed. You're not gonna have the fast reaction times. You're gonna have some lag whenever it comes to reading the market. Now, if you're trading, you know, if you're swing trading and you're trading the 15-minute to the day chart, that's fine. You wanna have a little bit smoother of a MACD, right? If you're trading the 1-minute chart where you have very, very fast in and outs, you're gonna wanna have a faster MACD. And that's simply because the faster you're trading, the faster you want that information to come through. The downside of it is you will have more noise. If you slow it down, it's gonna be cleaner, but it will be later. Okay? Now, here's something very interesting. Whenever you change your charts from the 1-minute to the 5-minute or the 15-minute to the 1 day, the MACD also changes. It behaves completely different. So the instinct to trade with a sped up MACD is to match the faster chart. That's a mistake. The 1-minute chart is already the most noisiest time frame that people trade. Speeding up the indicator on the top just multiplies false signals. Keep it at default or go slightly slower. You're gonna get out of a lot of the noise and you're gonna filter a lot of the misreads out. Faster combos exist for experienced scalpers using them for one small input at a time, not a beginner's trigger. The real fix isn't the settings, it's the time frame pairing. On 1 minute alone, the MACD is a terrible trigger and a decent filter. It crossover fire constantly and most are noise. Let a higher time frame like the 5 or 15 minutes set your direction, your directional bias, and only take 1-minute entries that agree with it. If the 5-minute MACD is above 0 and rising, you're long only. Any 1-minute short signal against that gets skipped, not taken. The higher time frame filters out exactly the counter trend trades that steamroll people. Your conclusion: look for setups in the 5 to 15 minute time frames. Once you see the setup, if the MACD is looking great, the market's rolling over in your favor and it's going up, it looks like a profitable trade, switch down to the 1 minute. Find your opening in the 1 minute. See what the market's doing in your higher, in your longer charts, and switch down to the 1 minute to find your opening. Wait for the dip, buy the dip, and wait it out. The higher markets is a lot less noisy. You have more time to think before you go ahead and trade, and you're not going to get steamrolled like you will in the 1 minute. I mean, if you place a trade in the 1 minute and in, I don't know, 3 minutes, you're down. You can easily be down $400, $600, $1,000. And if you would just hold on and watch the 5 minute or the 15 minute, you wouldn't have to worry. You would see what direction the chart's going in. I feel like too many of us get antsy in the 1 minute, trying to hurry and trade in and out, instead of just letting the market do its thing. Calm down, let the markets do its thing. Find your opening, and in the higher time frames, in the longer time frames, look at the trend of the market. If it's an uptrend, get ready to buy. Go in the 1 minute, get ready to buy. If the MACD's looking strong, you got a lot of movement in the market, go ahead and buy. You have a pretty good shot at making some money. This is directly correlated with the MACD that we just learned about. Find your rollover. If the MACD's going strong, there's a lot of movement in the market, wait for it to roll over, wait for it to break that high or break that low, and place your offer. You will, most of the time, make money this way. It's not as confusing as some think. It's not as confusing as I thought. Find your opening in the lower, in the higher, trade and find your opening in the lower.